Hi dear traders! Last trading week was more optimistic for financial markets. The news that inflation in the US has slowed down more than expected resumed speculations that the Fed may ease its monetary tightening and consequently the pressure on the economy. So there is a chance that the US may avoid a recession or make it controlled and short term. This is definitely a favorable factor for risk assets. Let's talk about the results of the previous trading week. The US dollar index, which demonstrates its value against the basket of 6 major currencies, dropped to 102 for the first time since June 2022. Consumer prices in December slowed to 6.5%, which is the smallest rate since October 2021. This is a clear sign that the US Federal Reserve has reached its goal. The regulator has been aggressively hiking the rate to tackle soaring inflation. Now more than 90% of market participants are confident that the US Central Bank will raise rates by only 25 basis points at its next meeting in February. This made the US dollar slump by 1.6%, which is considered its sharpest weekly drop since early November. Meanwhile, the euro is taking advantage of its weaker American counterpart and has gained 1.8%. The eurozone inflation is also easing. According to preliminary estimates, consumer prices slowed to a 4-month low, which is why the economic outlook for the European Union economy is improving. Yet, the European Central Bank is unlikely to change its monetary policy and will continue to raise the rate at the next meeting. In the UK, the Bank of England is also likely to stick to monetary tightening. The pound-dollar pair closed last week with gains, with the pound adding 1.09%. What's more, the data showed an expansion of the UK economy by 0.1% instead of an expected drop of 0.2%. This means that investors may soon return to the UK market despite the central bank starting the start of a long and deep recession. The main beneficiary of the dollar's weakness is, of course, the Japanese currency, which is trying to regain ground. Over the past week, the yen won back more than 3%. Speculations that the regulator may change its monetary policy as soon as the new governor steps in are boosting the demand for the yen. Besides, the decision made at the last meeting revived optimism among market participants. The Japanese regulator unexpectedly doubled the ceiling of the government bond yields, which is definitely a positive sign for the markets. Gold advanced last week, supported by the news that the central banks of Russia and China purchased the asset to add to their gold and foreign exchange reserves. For your reference, these countries are taking steps towards the so-called de-dollarization. Against this backdrop, the gold quote surged to the level of 1,920 per troy ounce. The oil market posted gains as well. In the first half of the week, oil was testing the support level of $79 per barrel, yet on Friday, BRENT was already trading at $85 per barrel. The gradual reopening of China after a long period of restrictions strengthened the prospect of energy demand for the world's second largest oil importer. Beijing has introduced new import quotas and consumption is expected to rise to record levels this year as the country lifts restrictions. At the same time, concerns about sanctions affecting Russian oil imports are also driving the price higher. Thus, European sanctions against Russian oil should come into effect in February. These are the trends of the last trading week, and now a new week and new portion of macro data are ahead. Do not miss our daily news reports to be always in touch with the latest events. See you soon.